So it's a really tough call at this point, but as you saw, there is really weakening data coming in, primarily from the ECB. You saw the ECB actually just recently do something that indicated that it was foreseeing a slowdown, took some pretty dramatic action. The Fed so far has stayed put after really doing a U-turn and a major pause, but query now as to whether the Fed is going to really begin doing some cuts.
How closely does the Fed itself pay attention to what the market is factoring in terms of a cut?
Well, the Fed has to take that into account, frankly. It's important that the Fed really keep its pulse on how markets are indicating, what they are foreseeing in terms of where the economy is going. There's other data too, of course, not just what is coming in through markets, but what's coming in through real economic data, slowing demand, what export-import numbers are looking like. All of those data points are going to be important as well.
The yield sort of stabilization of the last couple of days that we've seen, the 10-year briefly below 2.4 and now back above it. Do you think that marks the low of the yields for the near future?
Hard to say, Wilf. I mean, it is certainly one indicator that is pointing in a direction of things slowing down. Those, as you know, have been indicators that have pointed in very many cases to the onset of slowdowns and recession. So Fed is keeping an eye on that, I'm sure.
So the Fed now expects growth this year in the U.S. to be 2.1%, which is lower than it was, but it's not terrible. It's not recessionary. Do you think odds are that it's going to come in better or worse than that?
I happen to think that's the high mark. You can imagine people in the White House maybe trying to think of some more sugar highs here that could actually boost it. I think that could be kind of dangerous if you want to know the truth. These kind of short-term kinds of stimulus measures can be great in the short term, but not be very good at all for the long term.
Tax cut?
I do. Yeah. We have seen there's a drag actually coming out of that. It was great for a while, but as a lot of people predicted, it was going to only be something short term, and now you see that it's pretty much over.
Do we know that for certain already? I mean, could this be a factor of Q1 slowdown, all sorts of factors like the shutdown, weather, et cetera, et cetera?
Yeah, clearly Q1 numbers were low because in part of the shutdown, but there is nothing to suggest that there's much left coming in terms of the tax stuff. In fact, if you look at refunds coming in have been at all-time lows. So that is a signal that that this tax bill is pretty much has run its course.